What if I told you you could use AI to step into the future of your retirement planning? What's up, y'all? It's RB26 Shinigami, and today I'm going to show you exactly how I did that and what you can do to kind of build your own little retirement strategy using AI. So yeah, I know, boring and for the boomers, but face it, if we make it to the age of retirement, we got to have the cash to hold us over, and that help isn't coming from our jobs or the government. So here's what I did in order to jumpstart my portfolio and what you can do to jumpstart yours. The first thing we're going to do is head over to chat.openai.com, and yes, we're going to use Chat GPT if it's working. We're going to also take this with a grain of salt and make sure that you do your own damn research. Just don't blindly jump into whatever AI suggests, like some people believe that I did. So once you're there and created your account, the second thing you're going to do is type the following prompt. Act as if you're seeking to retire with the most amount of money possible, investing in ETFs and the stock market. You are aware of risks associated with investing and trading. How would you allocate your invested funds to diversify your risks and maximize your potential for returns? Please provide percentages for each index fund. It'll spit out an allocation strategy. We're going to adjust that strategy a little bit now. So the next thing is we're going to revise that prompt and add your investment goal, your retirement age, your risk tolerance, and your time horizon. And if you don't know, time horizon is how much time the AI will have to accumulate that amount of money. So now the prompt is going to go like this. Act as if your investment goal is to retire with X amount of money. Let's say you want to retire with $4.5 million. Put that in. Act as if your investment goal is to retire with $4.5 million at age 65 in the year 2054. Your risk tolerance is medium and your time horizon is about 31 years. How would you diversify? Now, obviously you want to adjust this for whatever you need. So let's say you're like 21 or something like that and you have more time, then just calculate the year that you expect to retire, how much money you want to have at retirement, and just plug and play all that in there. Your risk tolerance, if you're younger, might be a little higher, so you can put that in. If you're a little bit older and getting closer, then you might want to put lower risk tolerance or whatever. Just basically put in whatever fits your needs. So now that you have a diversified portfolio, it's going to spit out your next allocation. And what it did for me was it gave me 40% in equities, 30% in fixed income bonds, 20% in alternatives like real estate and commodities, and 10% held in cash. Once you have all of that information, the fourth thing that you're going to do is go over to Google and type in top performing whatever it is of 2023. So if you want, you can type in top performing ETFs of 2023 or top performing fixed income bonds or whatever it is that it popped in there. Basically, you want to Google whatever that top performing thing is that you got previously from the AI. And the websites that I like to use when I was doing this research was like Forbes.com, Bankrate, Money.usnews.com, and The Motley Fool to collect my information. I wanted to find what was historically performing well and what had a low cost basis and dividends in order to reinvest those dividend earnings that I had in there. The reason that we wanted to have a low cost basis is because I don't want to pay a shit ton of money for somebody else to manage the money that I put in there. I wanted to keep my costs down so that I can have more earning in the future. I wasn't 100% sure what TTM meant, so I asked it to clarify. It's just a metric used to measure the trailing 12-month yield or dividends or distributions over the last year, which is pretty good. It's definitely look out for that metric. The fifth thing we do is ask it for a layout to put all of this information into a spreadsheet so we can see all of that information easily. I'm not a pro in making tables and charts, but honestly, I prefer it over reading big ass paragraphs. So now that we have that, we have our column names and how to organize it. The next thing we do is put in the following prompt. Use the allocations previously provided. Act as if you have blank amount to invest. How would that look using the percentages you provided? So you're going to put in there how much you wanted to invest, and then you're going to ask it what would the percentages look like, and lo and behold, it'll show you how to spread the amount that you have over that portfolio built and researched. Now, if you don't have a trading account, feel free to find a brokerage you like and trust. After researching best brokerages with the least amount of fees, I found E-Trade to fit my needs. And if you're ready to dive in, you can use my E-Trade link in the description, and we'll both get a bonus when you make a qualifying deposit into your new E-Trade brokerage account. And that's literally all I did. It's been a week since I've opened this account, so I'm not expecting like crazy results. In fact, I'm expecting like a shitstorm this year, but I wanted to set this up and get a starting point on my own retirement account, and I wanted to see how AI suggestions perform with the little bit of money that we had saved up. Of course, feel free to follow the same steps I use to create your own, but please, please, please make sure you consult with a financial professional and or do your own damn research to figure out what works best for you. If you found value from this video, please make sure to hit that thumbs up and subscribe for more future content. And if you decide to follow through, let me know in the comments. I'm open to help if you need it. And of course, slay the day, my friends.